for this year are driven by the performance and the experience over the prior years. And therefore, if you kind of recall, we had moved from 2 lakh packets a couple of years back to about 4 lakh packets last year, clearly demonstrating that the proposition of a shorter duration to kind of beat the pink bollworm impact has been very well received, and that is what has played out in this particular quarter for us. We believe the liquidation also will be very high. In fact, it is in some of the pockets where it is complete. The experience of the farmers this year is going to be very critical for the future. So the key monitorable from our point of view, and which of course we will really be focused on, is the experience in terms of the yield after 2 pickings, for example, and kind of see how it compares with various other brands. So I think that's really where we are, and we are positive at this point in time.
Thank you very much, Abhijit. I'll request to come back for a follow-up question. Next question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. First question, on the export demand, especially for our key crops, if you can highlight the pricing and demand trend there, because I think in the initial comments we did mention that Rendi had a lower capacity utilization, wherein, if I'm not wrong, we were planning to expand the capacity. So if you could highlight some comments there.
Of all the molecules we produce, I think Pendi is one which has a good future. It has continuing demand. Having said that, I think industry is still dealing with the oversupplies from the previous productions, right? And so other product where I think we face challenge is really acephate, because that product not only could come under significant regulatory review, but suffers from the same fate as it is only sold in certain markets, not sold in certain markets. So how the supply situation is in those markets, that determines at what price we can sell. So I would at this point of time say acephate is a larger challenge than pendimethalin, because I mean, we like it or not, China will be there, they will continue to supply. So we'll have to become, we also have to start internally looking how do we become more efficient producer there and be competitive.
Sure. So from a full year growth perspective, given the pricing is what it is, would it be fair to say that large part of the growth will be volume led, while pricing will still be, an overhang in terms of overall revenues for exports?
So it's very, very difficult to say what will happen, 10 months from now, 11 months from now. But what we see is, if you start splitting our business in the segments, as I said, domestic formulation demand is looking good for the various factors I mentioned. Seed, the majority of our season is over. We are primarily, bulk of the business happens in Kharif, and the only adjustment would be related to how much return comes versus what we have estimated. So that adjustment you will see probably in the subsequent quarters. And domestic season is actually coming big. Then you have obviously CSM business. I think CSM business also has the same dynamics as international business, while contracts are slightly different. On international, I guess if you go around the world, commodity prices are low, but consumption is taking place. Prices have not improved. So I guess a little bit of this inventory in the system, nobody is able to predict. Neither I am able to predict. There's no crystal ball in my hand to say what will happen. Having said that, I think we have to start becoming efficient on our cost and customer relationship. That's the only way to manage the situation. And start looking for new molecules, new products, and phase out some of the older ones.
Thank you, Ankur. Kindly join the queue again for a follow-up question. Next question is from line of S. Ramesh from Nirmal Bang. Please go ahead.
Good morning, and thank you very much. So if you are looking at the current progress in the monsoon, is it possible to give us some indication of what is the kind of volume growth you can expect in the domestic market? And is the 19% volume growth you reported in export kind of sustainable over the next few quarters? What is the sense here?
So obviously, I can't give you a percentage. It's very difficult to say what percentage, but given the sentiments, we are expecting a significant growth. And you have seen that has happened in the past quarter as well. Because when prices are decent and planting is there, rainfall situation is certain, farmers do try to maximize their yield in return, and that's where crop protection do play a very, very important role. Our attempt would be to try to take full advantage of the situation which is in front of us.
So in terms of the export volumes, do you see the trend continuing?
So export, I think, so obviously from a volume perspective, things have started moving. Pricing is something nobody knows. And again, it depends on the molecule, because one of your colleagues did mention, person on the call, that others have seen. So it depends on what molecule we are talking, because every molecule has its own dynamics in market.
So in terms of margin, is there some sense you have in terms of when you can see margins achieve what you did a year ago, say, to take a full year?
So I cannot give you numbers, but all I can tell you the initiatives we are taking, and some of these initiatives for us being a seasonal business, you don't see in a very short period of time. So fundamentally, we are trying to look at our organization differently, trying to get it more focused on the business units. We are double dialing up on the partnership and collaborations. As I said, we are looking at portfolio, but you also have to understand portfolio. You have to do analysis, and you have to make sure you are able to exhaust, inventory. So a transition to more profitable, differentiated product itself is a journey, which means you have to identify old product, do that proper analysis, phase out them. But I said, look, crop nutrition is looking very attractive, and this is something we want to. It's a relatively higher margin, and seed also is a higher margin, and we want to manage for profitability.
Thank you. Yes, Ramesh, I'll request to come back for a follow-up question. Participants kindly restrict to 2 questions per participant. Next question is from the line of Rohan Gupta from Nuvama Institutional. Please go ahead.
Hi, sir. Good morning, and thanks for the opportunity. The question is on this. You mentioned that rationalization of the portfolio in agrochemicals, where you want to focus more on herbicide portfolio, which is weak. So what strategies you are looking at, whether you are getting into more collaboration with the global partners, global players, or going to develop your own molecules launched by yourself, more in generic or in special categories or specialty chemicals? So what is the strategy you're going to adopt in to strengthen your product basket?
So I said 2 things, not only herbicide, the crop nutrition. I also said even in insecticide and fungicide, which is a larger chunk of the portfolio in crop care, there also our attempt is to slowly phase out low margin and start bringing new and differentiated product where margins are relatively better. Now, obviously, we are not looking at doing everything on our own. Even if that means, we have, and I have been talking about partnership and collaboration as important part of the strategy, so that we are able to partner with the companies, both global as well as Indian companies, to bring those products and bring refresh the portfolio. Now, these things do take time. It's not something you can do overnight. So it's a combination of things, not one thing.
So you mentioned that definitely you will be looking at more of the collaborative partnership. I mean, coming with the global players.
I think we are moving to a mindset to say we have to make a smart decision, make versus buy, right? In a world where so many supply chain and product partnerships are available, so we have to be very prudent in making decisions. So whatever is financially better, that's the decision we should make. And obviously there's a point on supply chain certainty. So our decisions are more going to be based on make versus buy, pure economical decision, combining with the making sure there's a certainty of supply.
Just to add, the product that we launched in this quarter, one of the products we launched, Mark Plus, Rohan, is actually a 9(3) product, which is in collaboration with one of the majors. So I think there would be examples, and like what Gyanendra said, it will be a combination of both partnerships as well as prudent buys and in-house products as well.
So similarly, in our export market also, you mentioned like product like Matri and all have seen a significant price drop, almost half. However, you have seen a significant volume-led growth of almost 19% in exports. So just want that this very solid volume-led growth which is seen in the current quarter, it's driven by what? Inventory restocking happening globally, or the demand has picked up globally? What is driving this? And second, with such a sharp price drop in some of the molecules which we are making intermediates, do you see that the gross margin in this business will remain at the lower end only and probably will drag the overall profitability? It was also surprising to see when Subhra mentioned that we didn't have any inventory-led losses in export business despite such a heavy price drop. So it is not able to figure out the math that what earlier participants also asked, that we had a seed business which is a 22% margin in the current quarter. Domestic business should have a better margin, but still we had a 12% overall margin, which should be only the function of that international business would have been in the red. But we're still not able to figure it out that how the margins are actually in an international business or in export business. This is such a price.
So maybe I can provide you some color on that, if I may, Dr. Gyanendra.
Yeah, please go ahead.
See, I think you are right. I think the volumes have actually been better on the international business for most of our products, except the two that Dr. Gyanendra called out. One, of course, pendimethalin and acephate. What is driving the volume growth in these other products? I think the farmer level demand, because of, let's say, destocking that has played out, the farmer level demand has actually been fairly robust continuously. But I think the intermediary level demand, the stock levels have influenced the volumes that people like us are able to accomplish. So I think that has certainly changed, and we are finding that for the other products, the volumes have picked up. However, prices have continued to remain under pressure, and that is why the margins, the contribution levels, for example, in the case of the international business, have been lower than last year. With respect to your query about the math on this and the earlier caller's question as well, I think one way I can try and help you with that is if you look at our Q1 EBITDA at 96 crores, last year was 110 crores. So there's a drop of about 14 crores. Right, 4 crores is a drop. You can see this in the investor deck actually, and there is a 4 crore drop in seeds, which already Subhra explained, leaving you with a 10 crore drop in the crop care area. And a large contribution to this 10 crore EBITDA drop is coming from the international business gross contribution drop, which I just now alluded to. But despite that drop, the profitability, that is EBITDA of the export business, because 10 crores is a drop, but it doesn't really make it negative. So that's really the math to kind of reconcile the fact that the business has remained profitable. And of course, we have had specific deals where we have had, let's say, prices with very, very little margin because of the inventory that we were holding. But we have not, as a export business, lost money is what we would say at the EBITDA level. I hope it helps.
Thank you very much. Rohan, I'll request to come back for a follow-up question. Participants kindly restrict to 2 questions per participant. Next question is from the line of Bhavya Gandhi from Dalal & Broacha. Please go ahead.
Yeah, sir, thank you for the opportunity. Hope I'm audible. So just 2 questions. One with respect to how much was the price decline when it comes to domestic markets? We had a volume growth of 13%. Was there any price decline in the domestic markets? You've not given this split.
So the volume decline in domestic business price decline was upwards of 10%, and this is YOY decline. So the quarter-on-quarter decline has come down, but obviously because Q1 was on a higher price last year, it's 14% decline.
Right. And with respect to the 13% volume growth, if you can share which products have worked better, and with respect to price decline also, which products have not worked better. If you can just throw some light on that as well.
So, large part of this volume growth is coming from herbicides, and we did a small part of our portfolio, but we have seen good momentum in herbicide business in our domestic portfolio. Now, some of the recent launches, we called out Class 2 in our press release as well. Some of the recent launches has picked up there. So that's how the volume growth has come through.
Okay, and where have we seen the price decline?
So, price declines are coming in parts of the portfolio where we compete directly and we have to be priced as far as the market is concerned. So, that's where the price declines are coming. So, we have a fair bit of matrix in which we split our portfolio. Portfolio which is not very differentiated and where we have not a great share in terms of brand is where the price decline is largely coming from.
Okay, fair enough. Yeah, thank you so much. Yeah. That's it from my end.
Thank you. Next question is from the line of Ravi Purohit from SIMPL. Please go ahead.
Hi. Most of my questions have been answered. Just one broader question, Mr. Shukla, for you, since it's been now 4 months that you've been in the company, and if you could just share, what have been your learnings so far. I mean, Rallis is probably the only Tata Group company where profits are same where they were 10 years back, even today. What changes are you looking to make? What have gone wrong over the last 10 years? And how should investors look forward to in Rallis, with this your experience? What should we expect over the next 3 to 5 years? If you could just share, that will be very helpful for investors at large to understand where the company is headed over the next 3 to 5 years.
Yeah. So one of the things I can reiterate, as I said last time, was that group is committed to this business and there's a lot of support. And I've been saying this is the only direct farmer-facing business we have. So there's a lot of commitment to grow this business. And I probably might be just reiterating what I've been saying is, so we're in the right businesses. Seed is a business, if it is run for profitability, is a very, very good business to be. Crop nutrition is a very good opportunity where I see a growth as well as healthier margins, because beyond bulk fertilizer, there's a lot of scope to grow the business and help farmer make more money, because any company, unless can help farmer make more money, is not going to win the heart of the farmer. So those two areas from a business sector perspective, very important. And coming to crop protection, I think we have been weaker on herbicides. We are working on it, and even this year also, as Nagarajan has mentioned, we have launched a product, and so we'll continue to focus on that, because that is driven by labor dynamics of the country, where labor is available, or if it is mostly it's not available, and it's available is becoming very, very expensive, and there fungicide uses come to play. Having said that, fungicide and insecticide will also remain very, very important. So from a portfolio perspective, we are in the right segment. I think what you would see over a period of time, we'll launch new differentiated products. We'll transition to new product by slowly phasing out old products which are less. They do not contribute to profitability, and they unnecessarily create supply chain complexity. So that process we will start seeing. Obviously, it's a phase out. When I say phase out, doesn't mean it'll happen next month. It's a process, right? Now, from a product sourcing perspective, we do have our own R&D, and as we have reiterated in multiple calls in the past, that we are trying to now build an integrated facility which should be ready in 2 years of time, where bring our two R&D capacities together at one center in Bangalore. So we'll continue to invest in R&D in the right areas. And from a product sourcing perspective, we are going to be very, very thoughtful about partnership and collaboration. So the mindset of I should do everything on our own, I think we are moving away from that to be a more collaborative partner for global companies, as well as domestic companies, because I personally believe we have a very strong Tata and Rallis brand in the market, which works very well for us. So same product launched by us can get a faster and better traction in the market compared to a relatively unknown company. So partnership and collaborations are going to be key pillar. I also talked about, investing in customer-facing digital initiatives. So I think a lot of work has been done and will continue to augment that, which is more internal efficiency planning and accounting and everything else. But tracking retail and customer and spending time with the farmers, leveraging digital, because digital give us a scale. I mean, there are only so many people a company can deploy in the marketplace and get access to the farmer and get a consistent message. So we're going to be investing on more customer side digital investment that includes, training, marketing material, leveraging them to get lead indicators that helps in planning our business better. So that's on the digital side. And as I said, look, manufacturing also, we are going to have a deep dive to really see how do we make sure each of our products remain profitable and competitive in the market. And that's where we are not only looking at the product life cycle, at what life cycle they are, and global regulatory framework where things understand. We're also going to invest in automation to really bring efficiency in our production and supply chain. So those are broadly areas. And the last but not the least is investment in people. I think, we are looking at, some significant leadership changes, wherever required, to bring some fresh thinking. And also looking at not only from the perspective of what is the right, also right sizing the organization. And some of those things as you move forward, you will start seeing. Ultimately, the goal is that we should be able to deliver higher return on capital to the shareholders.
Okay, sir. Thanks a lot. We look forward to seeing the things that you mentioned today. Thank you.
Thank you very much. Next follow-up question is from the line of Abhijit Akella from Kotak Securities. Please go ahead.
Yeah, thank you so much for taking the follow-up. One is actually just on the cotton seeds business that we were discussing earlier. So just to sort of check versus the 4 lakh packets that we did last year, what's an approximate number we would look to maybe end this year with? Obviously, assuming there is no significant sales return. Second thing is just on the innovation turnover index, the ITI number. Given the kind of traction you're getting with Class 2 and certain others, is there a broad number, ballpark where we would expect that index to end up with for fiscal 25? And finally, just your sense on how the margins in crop nutrition compare with the margins in the overall crop care business. Thank you so much.
So I think there's a normalized margin and the margin we make. Our attempt is to move from the margin we make to the normalized margin, right? So if you say normalized margin as a sector, seed generally has higher than crop nutrition, and crop care is just below, crop protection is just below crop nutrition now. The caveat here is that on the mix of portfolio, if you get a differentiated product, which is well received in the market, your margins could be very high. But at a macro level, I would say crop protection followed by crop nutrition followed by seed.
So, Abhijit, maybe I'll answer your question on cotton. So cotton overall, I think we are hopeful that this year we'll do highest ever cotton packets between North Cotton and Southwest Cotton. Obviously, Southwest Cotton liquidation trends are yet to be seen. North Cotton, looking at the liquidation trends, again, we are hopeful that we should be able to get significant growth over last year's actual liquidation. And this was also in a way constrained by the packets that we got in terms of production. So if it was unconstrained, we would have got further high volumes on cotton. Crop nutrition, I think Mr. Shukla already alluded that it does make better margins. And given the fact that we share common resources in terms of crop protection and nutrition in terms of front end, we do get a significant benefit in terms of bottom line.
Got it. And on the ITI piece, Shubhra, if possible?
So idea, Abhijit, is difficult to say because it's last 4 years, how contribution of it versus the overall portfolio, and we do expect the overall portfolio to grow as well. Having said that, our ambition is certainly, as we said earlier as well, that idea should start moving to high teens, and which is where we are seeing an uptick happening in first quarter as well.
Okay. Thank you so much, and all the best.
Thank you. Next follow-up question is from Varshita from Antique Stock Broking. Please go ahead.
Thank you for the opportunity again.
Varshita, can you speak a little louder, please?
Is it better now?
Little better.
Yeah, we can hear you.
Yeah. So, we've heard that there has been an increase in the technical prices in the domestic market, largely due to the freight issues that we've been seeing. So, if you could suggest if something that is happening with us as well, and if this would, put some pressure on margins probably sometime in the second or the third quarter in the domestic market.
Maybe I can take that, Dr. Gyanendra?
Yeah, please go ahead.
Yeah, no, I think you have to look at the time scale. Actually, if you compare it with last year, that is YOY, that may not be necessarily correct. But if you're comparing it in short run, that is, let's say, MOM or Q on Q, what you're saying, yes, there are certain technicals where certainly the raw material prices as well as the technical prices are creeping up. We will have to really see product by product. In some products where the brand strength is there to absorb these increases, it would be possible, but certainly there would be some where it may be leading to some kind of margin compression. It's hard to say at an overall level.
Got it. And one question on if we have taken any price hikes probably on sequential basis, especially ever since in the domestic market, that is, ever since the monsoon has picked up.
Our pricing has actually been very, very product specific. I mean, I think there are products where we increase, there are products we reduce. That is more dictated by the strength of our product and the demand that we are out looking for that product. So to answer your question, some products, yes. But most of the products, I would say, have actually had a reduction. Most of the products. If you compare it, I would say YOY is a better comparison because if you compare sequentially, the products that go into kharif and the product, I mean, there's a difference, right now we've had more of herbicides and all of that going. So YOY, I would say pretty much most products there would have been a decline.
Thank you. Darshita, request to come back for a follow-up question. Next question is from the line of Pradeep Rawat from Yogya Capital. Please go ahead.
Yeah, good morning and thank you for the opportunity. So my first question is regarding the overcapacity in China. So we are hearing from other players that there is many capacities in the Chinese mainland has been shut down, and their inventory level are also on the higher side. So can you comment regarding that?
Yes, I think that is correct. I think we have also got a lot of inputs about high capacity. Yes, some of them are closed down, but I think the supply is pretty high, which is what is causing the price, creating a lid on the price to move, even if there is a volumetric demand at the farm level, which is robust. So yes, I think that is true.
Yeah, and with regard to inventory levels at distributor and retailers in domestic and international market, can you comment on that as well?
So, international supplies certainly continue. There's no dearth of material. North America is going through a big season, and then Latin America, these are the two largest markets they will consume, including China, ASEAN, and India. I think at a domestic level, I'm sure you are aware that many companies were stuck with inventory, and that's one of the reasons prices are still subdued because everybody's trying to convert that inventory to cash and also make sure their products are available during the season. So, but having said that, I think as monsoon progresses, sentiments are positive. I believe companies also have been very careful in planning subsequent inventories. So I think at a domestic level, situation to only improve, not get worse.
Okay, thank you.
Thank you. Next follow-up question is from the line of S. Ramesh from Nirmal Bang.